Y'all, welcome back to another Johnson investment video. I'm not a financial advisor. This is for my own self-documentary of trades I've been taking and just learning from the daily flip strategy that I kind of came up with of my own kind of concept that helped me get better in the market. So I'm just going over some few things that I've learned from this week of trading gold. And I noticed my strategy, obviously everybody's strategy worked good when it's in a perfect uptrend, perfect downtrend, perfect clear reversal. But one thing I've noticed is I don't really do too well when price is kind of in a choppy manipulation stage. So, and obviously everything that I do is always going to be based off a daily candle. So obviously I'm in replay mode, by the way, so I do this just to help me learn and get better at my strategy every single day and continue improvement. So obviously let's go ahead and get to it. So as we go into today, I always look for price. We can see here that we're clearly in a nice downtrend. Previous day closed bearish. And the day before that closed bearish. So we can see clear in the downtrend, but we also can see that we was oversold and prices made a huge spike up. So one thing I've learned is I don't use the moving average as a entry, but I use the moving average really as a understanding of the weakness and strength of the trend. So when I see like how the purple and the blue moving average are kind of spread apart, when I see wide spreads like this and widen like this from the moving average of each other, then just let me know that the trend is going good. And especially when price is underneath here, the blue one, then let me know that the trend is going good. But once I see it cross that threshold, these are usually the first sign that the trend is weakening. It doesn't mean that the trend can't keep going down. It just means this is the first sign the trend is weakening. And especially when price is oversold. Using price as oversold, price does two things: either reverse or retrace and go continue in this direction. And especially when it start crossing this threshold, then they let me know like how it did here. You see how we was oversold again, and the price spiked up. So these are clear signs that the trend is slowly weakening, but it doesn't mean that it can't keep going down, right? So it just gives me an idea of where we at in the trend. Keyword: I don't use the moving average as an entry standpoint. It just gives me an idea of how strong we are in the trend, you know. But as you see, right? So we're oversold again here, right? And right now we're on a key level. So this is what I've learned, right? Usually when we have a nice down momentum here, right, and you see a candle like this, right, obviously if I'm looking at this, obviously I'm looking to sell, to be honest. I'm looking for price to retrace, because like I said, price usually retrace between 10%, 0.30%, 0.60%. Once it hits them levels, price usually flip from them direction, which create, when I say flip, I'm talking about create a clear breaking structure. So this is actually 30% I put, right? So 30%. You know what's gonna be cool about doing these little videos? Eventually, I'm gonna start making a lot of money off of this stuff. And for those, and y'all better go back and look. See, right now I don't really get a lot of views, and right now I don't really care for it. Right now I'm in the backstage, you know, of really just working on myself. To be honest, because I take this very serious. Like, I'm very passionate about trading. So these golden levels you see right here are like my retracement levels where I expect price to retrace, because typically from a candle behavior standpoint, I expect price with bears, so I expect price to open, retrace a little bit, create that little flip, kind of how it did here. You see how it opened, it retraced up, then gave us a nice clear flip. So in other words, my entry would have been here, stop loss would have been above here, and obviously take profit would have been below here. Now I ain't gonna lie, I do my take profit based off a percentage base, because I know some people say, oh, stop choosing things off percentage base, but I do believe that price do move at a certain percentage, and I've been doing this study and it works for me. So it's not a one size fit for all. I think whatever works for you, figure out what works for you and do that. And this has been working for me. So I've learned that price retrace at a certain percentage. So as you see, stop loss has been above here. So when price does that, I wait for price to flip like how it did here, entry here, and my stop loss will be above the previous high of that day. Because why? I'm expecting for price to not go back above that previous high. So my expectation is to see price continue to go low, and I usually aim for at least between 0.60% to 1% of a take profit. So Obviously I choose my support resistance levels multiple ways. Obviously I'm gonna choose here as a resistance level. Why? Because this is the low of the day from the previous day that price broke out of, right? So this is a key area where price can potentially either come to my 30% or 60% level, or it can retrace deeper and come into here and flip off of this, right? But one thing that I've learned, right, and I had to ask myself my question is, usually when we have a nice down momentum, right, like this, right, clearly, okay, you expect price to kind of come in this idea concept area and reverse, right? But like I said, we're at a level where price can also reverse as well too. So usually when I see a down candle like this and I see an up candle like this is usually my candle formation that I look for to see price reverse. So um, let's just say, okay, hey, look, price is going now, price is going right, and then price give us a little break below, right? So as you see, let's zoom in on this. We can see here that price clearly was in the up, nice momentum. Price came up, came down, came up, then boom, broke. Boom, entry will be here. Stop loss be above here, right? That's typically how I would do that. So let's say, okay, I sold here, right? And then I put my stop loss above here. And then I have my take profit, obviously below the previous low, or like I said, at a certain percentage. So I kind of do my percent off my entry. So let's see, at least 60%. Okay, cool. So yeah, it's at 60%, or at least target this low, which is close to 1%. So cool. I'm okay with that. Risking 1,000 to make 2,400. So in this case, let's fast forward. In this case, boom, I'm in drawdown, and then you watch the 4 hour. Watch the 4 hour candle too as well. Look how it does that. And then it goes up, and then boom, I get stopped out. Boom, now I done lost $1,000, right? So this is what I'm realizing. I'm like, okay, hey, look, clearly was an uptrend, right? But it still made a clear breaking structure. Not as clean as I've seen others. I've seen others that's better than this, but it's still a breaking structure regardless, because not every breaking structure is gonna be perfect. But what I'm learning is, instead, I'm like, you know what? What if I just wait? Like, if I know, it depends on where we at in price. If I know we're at a key level where price can reverse that, and I see we have this nice down momentum like this, and we have this candle formation right here, typically from this formation right here, we can expect price to reverse, right? I'm already expecting a reversal, even though I want to keep in mind. So the ideal wasn't wrong or what I did. It just where we currently at, and price just wasn't right at that time. So obviously, I want to wait. So obviously, instead, what I'm thinking is, cause I learned from this one dude. He called him Type 1, Type 2, right? This one guy who's trading. So I kind of got this kind of idea trading the names Type 1, Type 2. I just kind of changed up a little bit. But did some, I always kind of did my style like this until I kind of found someone who kind of filled in the gaps where I was missing. So um, it's like considered Type 1. So it's like down closed candle and then Type 1. And then obviously I'll wait for price to kind of retrace here and come up to into here. So after price don't open, retrace down, boom. Your expectation is to enter off this flip right here, right? So in this case, if this is a reversal, right, then this would be your clear break right here where you be buying here, stop loss below here. So I'm thinking of, I need to instead, if I see price is at a support level, like how it is right here, a key turning point, not just any support level, but a support level where we can potentially see a reversal. I see a candle like this, and especially with oversold, this way you kind of like, okay, you know what? Let me wait. And so in this case, it's probably best for me to wait to see how this candle gonna close first. And that way, that can help me not take, that can at least reduce the amount of loss I take. Because you're gonna take losses, but if I can, reduce the losses I'm taking, or at least minimize how much I'm losing, yeah, I'm gonna go for that. Um, so in this case, this is a case study where I'm thinking, okay, hey, obviously I don't know how well this worked every single time at a reversal point, but obviously we'll see as I keep trading, because I'm doing 100 trades, so we'll just see how it goes as I just keep trading. So obviously price open, retrace, and then push up. So I mean on the next 4 hour candle, because it did that and we had a clear break, on the next 4 hour candle, I expect price to keep pushing up. Obviously we get a little retracement and then price spikes up, right? and we've at 60%. So in this case, I already took a loss. So obviously, I'm gonna wait to see where we at. Now we still got one more level where price can come into. Price can still come here, retrace here, and come back down. So price goes up, and then boom. So on the next 4 hour, I'm expecting price to continue to push into this because we was already bullish. So that way, guess what? So let's say if I was unconcerned about this area right here, right? And I see this, okay, you know what? I'm gonna wait and see what this candle gonna do. Because guess what? If I would have waited to see what this candle gonna do, if we would have closed bearish, right, then that would have gave me an indication that my next 4 hour candle I can get in and expect price to continue pushing down, especially at a key reversal points. And then obviously price, because if we kind of zoom out a little bit, you can see here where price was here with it, and then price kept going down. So we know when price is in a down motion, it will keep going down. So but even here we had that same kind of formation, and look what happened. Price opened, spiked up, then came down. But you could still make your money off of that trade. It just depends on where you're entering at. So in this case, we're here with it. Fast forward, keep it pushing. No time left, okay? I'll try to keep my stuff within 10 minutes. And then you can see how price moves even on 4 hours. So my main strategy is gonna always be based off the daily and 4 hour. The daily and 4 hour is gonna give me a lot to understand what I'm looking to. Okay, boom. So I can see, boom, we keep going up. And the goal is try to catch the main move of the day. That's my whole goal. Try to catch the main move of the day. And then boom, as we come into our next resistance levels, because this is the last level I expect price to retrace from. So it's not that I was wrong, it's just I got in at the wrong time. Why? Because of what we were currently at. We was oversold. Price had already created this formation right here, and then the next one we push up. So, and then let's see. And then boom. So we're here with it. Price comes down. We retest this high again. Kind of fast forward a little bit. And then boom. So we get a clear break right here. So you can see here price came up, came down, came up, came down. This is a clear break. Now typically, this is kind of where you'll want to enter in at, but also then stop off would have been above here if this is the case. But because in this situation, the reason why I'm not going to enter in, even though it gave me and this is a clear break. So I mean, tomorrow it came up, came down, fell that high, and then broke that. That's a clear breaking structure. But the only reason why I don't want to get in quite yet, because in fact that for the past 4, 8, 12 hours, we have been going up consecutively. You know what I'm saying? So I want to see how this candle is going to close. I know from experience, especially in situations like this, when you know this could be a potential reversal, even though I'm looking to sell. I know from experience, price, if I don't wait for the 4 hour to close, sometimes then I know from experience, price will reverse like how it's doing right now. So in this situation, it doesn't mean every situation. Sometimes it actually will respect this and then keep going down. So that's just in this situation. So you kind of wait. Okay, boom. Now look. So we see how price closed. So we see price is weakening at this level, which is a good sign of 4 hour, right? Which is good. That means price slowing down. That's what you want to see. You want to see price slow down. Then price comes up into this level again. So we're deeper into this level, and then we drop all the way down. So we took out the high of this 4 hour candle, and then we came all the way back down, which is a clear sign that price can potentially reverse. So in this situation, right, we took this high out, we here with it, and then price is kind of here, where them broke below here, right? Let's kind of see, and then boom, price starts coming down right here. Off rip, you could just sell right here or wait for it to create a better structure. So you either sell here, put stop loss above here, or wait for it to create a better structure, then pull. Wait for it to create a more better structure first, and then as it, like how it's doing right now, so you can see how it's creating more of a structure. So I say if the breaking structure is not clear, then don't take it. You know what I'm saying? Don't take it if it's not clear. So in this case, you can see how we kind of range bound. Our price came down, came up, came down, and we had this nice pattern right here, and then obviously price retraced back. We can see how this is doing, and then price does this right here. Now off rip, if I see that this is clear, you see price came up, came down, came up, fell that high, so you took this high out, fell this high, and then broke this little bit, and then now we here with it. So off rip, I'm gonna sell right here. I'm gonna sell right here, and I'm gonna put my stop loss like right above this high, expecting price to not come back above here and then take profit. Will be like either back to where this low was at, or coming back down into here. So I'll probably put like right here, go based off percentage, and then let's see. So this is a good enough. And then obviously price comes into it. And then in this situation, price kind of comes back down. So it just shows that it doesn't necessarily mean that even though this bias here was wrong at this time, it doesn't mean that you can be right here. So it's all about the condition of where you at in the market at the time. So like I say, especially seeing a 4-hour candle like this, you kind of want to wait, especially when it's oversold. You really want to wait to see what the next 4 hour gonna do. And if this is a reversal setup, then this is kind of the ideal formation you want to go off of at a reversal standpoint. Now here's what's catchy about this trade. Now look, now as I've been trading, right, I've been learning this thing that kind of came up in my mind with the daily manipulation. What I've learned is, let's go and fast forward this. So fast forward. Okay, boom. So now we're on a new day, right? I'm gonna keep my percentage levels at because it's kind of pretty close to this opening. But what I learned is, you see how the previous day right here was closed bearish? What I learned is, when it is a reversal setup, what I learned is that price like to take out the previous day low. You can see here, price came down, came up, came down, fell in this low, and then from here you expect price to push up, retest, continue higher. But you don't know it until it doesn't. But that's what you anticipate. What I learned is, when it's in a stage like this, what price would do is take out the daily low, right? But then it won't take out this low. It will just take out this low, and from here you expect a reversal from here. So I will be looking for price to reverse right here. I'm not going to put my percentages in this situation. In this situation, I'll be looking for price to take out this low, which is this range right here on the 15-minute time frame, and then break back above, retest, and then that's my entry going back up. That's how I would do that. And this is what I call the daily manipulation, because I have this strategy called the daily flip, right? Which I already kind of explained to y'all earlier. But now we have another, and I have the daily flip and the daily continuation, and then the daily manipulation. Daily manipulation is where it take out the previous day candle, right? This is, and this can happen even in continuation. Like when price is going down in a trend, it can be going down in a trend. It can take out that previous day, and then go back down in this direction. So you can have a little bit manipulation and downtrend too. So it takes out the previous day low, and then it doesn't take out this low right here. So from here you look for price to reverse from here, and then price take the low out, and then from here I look for this around here to be taken out, at least here to be taken out. Doesn't matter. And then boom, so price could be better. And price comes down, and then boom, we get a clear break. This is a clear break. You can see price came down, come up, come down, and boom, breaks it. Nice strong push, right? So off rip, I'm going to buy off of that. And this is how I'll be doing this in real time. Like I said, this is my own self study, because I trade almost I at least trade about 3 times out the week. the maximum of 5, and then obviously I'll probably aim for this or aim for the previous high. Point is, this is a good risk reward. Entry here, stop off below here because I'm expecting price to not come back below here, right? And on top of that, I'm expecting price to close bullish on the 4 hour, especially after taking this out and then reversing, because this is a reversal setup. And I know that too. A lot of manipulation happen really when prices also getting ready to reverse as well too. I noticed that. And then obviously we close bullish, so because we close bullish, I expect price to retrace and then continue to go higher. And then this situation, price is here, it goes up, retrace a little bit, kind of fast forward, and then boom. So as you can see, right, let's kind of zoom, this squeezes in. Just a recap, you can see here, even on this day right here where you would have sold here and you would have lost here, right? That's okay. But what we're learning is that if you know you're at a key reversal level, well, what I'm learning is, I wouldn't say y'all I'm learning because y'all really watching from what I'm learning, but what I'm learning is price is pushing down and we're at a key support everywhere. Price can potentially reverse that, and we see a kind of formation like this. Expect for price to reverse. Even if you have a sell bias, then definitely want to wait for it to retrace a little bit to actually the actual structural level instead of going by a percentage. But at least wait to see how price responds. At least wait for a slowdown. Either wait for the candle to close red, bearish, or wait for the slowdown like how it did here, and then you see this type of formation right here, and then boom. Can you see how it took this high out, then fell that previous high of that candle and then drop? You can see that same formation happen. But then look, after this overall formation, right? So I'm showing myself, okay, look, where we at in the market, the condition matters, you know. So instead of selling here, especially with this type of condition where we at, we know not to sell. So instead, wait for this type of formation right here, and then boom, you catch it right on this breakout. Now, as far as catching the reversal, because it don't always look like this. Sometimes it look a whole lot better than this. But catching the reversal, you see how price comes down, comes up, comes down, take out the previous day low, but it doesn't here. And then from here, you look for that reversal. Price breaks out, and then boom. Even if I put out my measurement, look at 54%, 0.54%. Like I said, price either retrace between 10, 30 to 60% before it goes back up, before it goes in the direction. In this case, it did that, came close to 6.6%, and then it reversed and then went up from there. So this is a kind of formation right here that I'm definitely gonna be watching and learning. And the only reason I replay back, this is kind of old, but I'm gonna go to the current week to show you the same. This happened around April 8th on a Tuesday. I'm gonna show y'all the exact same formation that happened recently in August. And this happened on this current trading week. So I'm gonna close out this right here. That same as that formation that I got. Only reason why I started doing that because I was decided to I took a loss on a similar trade formation like this, and it caught my attention. So I started kind of back testing, looking back in history. Cause obviously you learn when you start looking at history and see how it plays out. So I started looking back in history like, I know a lot of y'all might be confused, like, look, hey, look, I don't really understand what you're talking about. I'm just being honest, it's not meant for y'all to understand right now, because I'm not trying to teach it to y'all. This is really, like I said before, these are literally my own self-documents. I'm keeping up with myself. And I figure, hey, I got pictures too, but I can also learn from videos. So, we go to the current week where that same thing happened. And I gotta find it. If I can find it. Oh, right here. So I'm gonna go up. Same exact formation. This happened this current week. The same as that formation. This is around August of 2022, same exact formation where we're in a nice downtrend and price decides to go up, and we had this bullish engulfing candle, and I know it was going up. I know it was, and I think I was trying to buy right around, actually right around here, I think, and I took a loss. Yeah, I'm gonna zoom in on this so I can see. But you can see here that exact same formation. We're getting ready to reverse. Cause I believe gold is getting ready to go back up to all-time highs again. But we're on this key support level. Price had opened and retraced, and then we got a clear flip and I bought here. And my stop loss currently below. Got time. It was the current low, and then you can see how price came a little more deeper and stopped me out. Obviously, I didn't trade no more for us today because regardless, you can see how that day would have went. But if you look going to that next day, we took out the previous day low, but we didn't take out this low right here. So this is what I call the daily manipulation. So I have 3 phases now since I'm learning. So obviously the daily flip is catching the flip of the wick, so price retrace, and you catch that flipping buy here, stop it below here. Then the daily continuation is catching the continuation of that. So you can see here price retrace, continue up, it comes back to that level. Let me zoom in on this for y'all so you can see this. So you can see here where price opens and retrace, it creates this clear flip. You buy here, stop up below here, it goes up. The daily continuation is as price continues to create structure. This is the next continuation. Buy here, stop it below here. At that point, I don't do 2 trades within that setup, and that's it. Now this new thing that I'm figuring out is called the daily manipulation. It's where price take out the previous day low, but it doesn't take out the day before that. And then it goes higher. So you can see how it did the exact same thing. It took out this low right here. And guess what? If I pull up my tool, I guarantee this is at least 60%. My point, this is 0.60% right here, where it's open and retrace that. And from that 60%, like I told y'all, price retrace between 0.10, 0.30, 0.60. Don't ask me how I figure it out. I took time to figure out it took a lot of back testing. So price came down and then flip right here. So you can see how it came down, flip, entry would have been here, stop loss would have been here, and then boom, this would have been an easy take profit. So this is the exact same formation, literally, that I was just showing out previously. So and you can see here how kind of similar, how even on the 4-hour, how price kind of was coming down. Then obviously price got a little bit weak, and then on that next candle, after price got a little weak, on that next candle, you can see how price pretty much took it out and then pushed up, and then our next 4-hour we shot on up. So like I said, this is a case study for me that I'm kind of learning and getting better at. So I'll see y'all next video, because this video is getting too long.